The issue of risk is one that is not confined to Australian agriculture, and I think if you look more broadly around the world, most of the farm policies, one way or another, are aimed at tackling the issue of risk in the agricultural sector of the various economies. So it's useful to look at risk in Australian agriculture from a couple of different perspectives and start to think about how the sector has handled that and what the issues might be into the future. So what I want to do is just have a quick look at risk and volatility and what we understand and how we measure it. To put it in some context, to look at how agriculture in Australia compares with other agriculture sectors in overseas locations, and also how the farm sector, for example, compares with other sectors of the Australian economy. Then to look at what the last 15 or 20 years tells us about how farm businesses in Australia have been managing risk and what lessons that might provide us with in relation to the future. Firstly, the issue of how you measure risk, how you put some quantification around it. There's a number of different options available. Generally, they involve taking a look at a particular statistic, adding some notion of a trend line to it, so you get some sort of a smoothing of how that statistic has performed over time, and then looking at the percent variation around that particular trend line. So that gives you some quantification, if you like, or measure of the volatility of the prices for that particular commodity, or the volatility of production for that particular commodity. So that is a quantification, if you like, that allows some comparison of volatility between different sectors, different industries, etc. So if we look at the risk associated with, or the volatility associated with, agriculture in Australia and try and put it into context. The first, I guess, comparison we can make is how does agriculture and the volatility and the risk associated with agriculture in Australia compare with international situations. So the first column on your left is an index of the relative volatility of livestock outputs for a selection of major international countries that have reasonable scale agricultural sectors. And what it highlights to us is that Australia ranks below average. So in that case, the average would be 100%. So that's where the index is set at. And you can see that Australia is slightly under that. So our output of our output of livestock products is less volatile than the average. But if you look at our output of cropping products, we're top of the table. So Australian agriculture is almost, in terms of its crop output each year, is almost twice as volatile as any of the other nations where the statistics are available. And I was actually reminded of this the other day in talking to a visiting French wheat grower who explained that his average yield over the last 20 years is about a little over 8 tonnes per hectare. And in a really bad year, it gets down to 7, and in a really good year, it gets up to 9. And he was absolutely flabbergasted at the discussion of the variation of the yields, for example, in wheat growing in Australia compared to what he was used to in France. And I guess these numbers highlight that the volatility in the crop sector in Australia is certainly much higher than in any of the other nations where the numbers are available. And if you then look at the overall agriculture sector, you see that the sector in Australia is perhaps second in terms of volatility of all the nations included in that list, second only to Uruguay. So I guess it helps to put in context, if you like, the nature of risk and the scale of risk in the businesses involved in agriculture compared to other businesses around the globe. We can also look at how agriculture as a sector compares to the volatility of other sectors of the economy. This is some work that the Productivity Commission has done a number of years ago, and it's been updated, and it reconfirms the same piece of information. That is, if the average volatility in output for the Australian economy is about 100, that agriculture is almost 2.5 times as volatile as a sector as any other sector in the, or as the average for the sectors in the economy, and certainly the most volatile sector of the economy. So that helps to, I suppose, put in context the nature of the risk that farm businesses need to think about in terms of their management options. If you look at it over time, the middle column, certainly the indications are that over recent decades, so from 95 to 04 and then 04 to 11, the volatility has been higher in agriculture than it has been in the past. And I suspect those involved in the sector would confirm that that's certainly the feeling that you get, that the recent period has in fact been more volatile than what it was in the past. And I guess if we look at the various different sectors of agriculture in Australia, no surprise again that the grains and oilseeds sector is by far the most volatile of any of the sectors of the economy. Beef behind that, and then sugar, sheep, meats, dairy, etc. But it really does highlight, I suppose, that the grain sector is the most volatile, the agriculture sector itself is the most volatile of any of the sectors of the economy, and in international agriculture, the volatility of, or the risk associated with agricultural production in Australia certainly ranks right up there at the top of the scale. So it does help to put the whole issue of risk management in a farm business in that sort of context. If we look at the different commodities, I think one of the failings of Australia in some respect is having good data about commodity prices over time. We can get recent years reasonably well, but going back it's a bit harder. But what it does show us, if we do pull up, for example, monthly average prices over the three main commodities, is they tend to operate independently of each other in terms of their variation around the average or variation around the trend, but not always. And you can certainly see there from that period from 09 through to 11, all the major commodities were below that longer term trend, albeit it was an upward sloping trend line, and there's been some other periods when that's been the case. But broadly speaking, I think it does provide us with a picture that in risk management terms, mixed enterprises probably provide some protection that's not available in a single enterprise commodity production system. So if we look at how Australian farm businesses have fared over the last 15 or 20 years in terms of managing that risk, we can look at some of the indicators of farm business performance over that period of time. And I hasten to add that the data used in this comparison stops in the middle of 2010, which was the last AgSurf survey data. So I think the numbers that Bruce has just provided us with provide some reassurance that some of that adjustment has started to occur. But certainly if we looked at the change in key financial indicators, so if you compare an average over the period from 1990 to 94, for example, with an average over the period from 2006 to 2010, and you look at all the broadacre industries, what you see that is in real terms the value of land and fixed assets for those businesses increased by about 150% over that period. The amount of debt carried increased by about 130%, and the net cash income, that is the income generated by the business that's available to repay debt or that's available for owner-operator allowances, increased certainly by a substantially less amount. And if you look across at the different commodities represented in the ABARES survey data, it certainly stands out that the growth in debt over the period was most marked in the grains and oilseed sector. So whilst the asset values held by those businesses certainly increased substantially, the debt also increased substantially, and the net cash income was certainly more modest in terms of its increase. Across the other sectors, a more stable picture to some degree, an indication of higher debt levels in the beef specialist businesses, but the mixed livestock enterprises certainly more modest in terms of the changes that have occurred over that period.